Hi, for those of you who don't know who I am, my name is Josh, and I'm from the Good Brothers Trading Academy, and today's lesson's going to be on price action. We're going to break down this chart bar by bar, and I'm going to tell you who the market rewards the most. Now, as usual, we're brand new to YouTube. If you could hit the like button for us, subscribe to the channel, don't forget to click the notification bell so every time we upload new content, you'll be first to be notified. Now, the ticker symbol is TSLA, Tesla. And what we want to see and what we want to look at is first and foremost, we believe in going from the top-down approach, but we're going to start with a 30-minute time frame today. And the reason why I'm going from a 30-minute time frame is because I suggest every new trader lets the first half-hour candle form first. We call this the opening range bar. It's very critical because there's a lot of volatility. Now, some traders will tell you the first half hour or hour of the day is the best time to trade. It might be the case when you've reached that level of competency to trade that quick on the open and deal with the volatility that happens. Let's get back to the chart. So we have a 30-minute time frame setting up an indecision bar. Some people call this a high wave candle. We have our top and our bottom, so we put our top in, and here's our bottom. This is called the range of the candle. This would be the opening range of the day. And generally what we want to see, especially when we get a high wave candle. I happen to love this candle. The reason why is because it shows that there's indecision in the market. Sure, there's more sellers than buyers because the candlestick is red, but still what the market is telling us is the price is in the middle. And so what we have to do, and we have to wait for, and this is why I like it, especially for new traders, we have to wait for a pattern to be put in. So we all know what a bull flag is. So if we get a pattern that looks something like this, we can understand a couple of things. First and foremost, we have a different opening range bar. Sure, the opening range bar was the indecision bar, but now what we have, if we add all these candlesticks up together, we have the opening price, right? Because the price closed down here. Our opening price is now a green bar. And a wick goes all the way from the bottom to the top. Now our opening range hasn't changed because we're still in the opening ranges bar. Now the candle or the look of the candle in a different or higher time frame is going to be different. Now we have what we'd call an exhaustion bar. So the momentum of the stock is currently up. We're also seeing what I always talk about, our higher lows. So we put in our first low here, and then we get our higher low. Now, something else to look at is we're kind of creating some kind of a wedge-shaped pattern. Now, the market will form many different kinds of patterns, but we're still seeing some sort of a triangle pattern built. So now at least we understand and we're seeing a pattern built to where we know that we can start to take a trade, whether it's long or short, etc., etc. So let's get back to the Tesla chart real quick. Why I brought this up is because when we get an indecision bar, we need to see a pattern built within the indecision bar in order for us to want to take the trade. And we'll talk about after the trade breaks, not to feel FOMO, the fear of missing out. We don't want to get into a trade because we're rushed into the trade. We want to let the trades come to us. So when we're first starting out, patience is huge. The market rewards the most patient. And so what we want to do, depending on the sentiment, of course, and rules vary, but this is for a beginner setup. So what I want to show you is the first candle that we brought up was the high wave candle, okay? Or an indecision bar of some sort. So we have price in the middle. The second candle, as we can all see, is a bullish bar. And now the bullish bar broke the high of the indecision bar. This tells us that price is moving up. But is there a pattern here? And this is the point I want to bring up. There is no pattern here. However, if this was to happen, an indecision bar and then a big bullish bar breaking the high of the range candle, the opening range of the day, if the bar closes above the opening range of the day, we have ourselves something. And let's look at what the pattern would have to look like in order for us to take it long. So we'd want to see sellers come back, retest the bottom, the top of the opening range bar or the indecision bar. This would give us confirmation knowing that we are getting some sort of selling pressure back into the market. We would of course want to see more bullish pressure if we are wanting to go long the stock. Now this could even have a bigger wick at this point. The next bar we would like to see is a higher low of some sort. And we would like to see the new bar, the 3 inside bars, we want to see it now approaching the high of the candle that broke the previous opening range bar, or the high wave candle. This gives us at least some kind of pattern. What kind of pattern does it give us? It gives us some kind of a flag pattern, right? So we have ourselves a big move up, we have a consolidation, inside bars, or some sort of a flag pattern, and then we should get our liftoff, right? Okay, so let's go back to continue breaking this chart pattern down. So this is what we currently have right now. Now there's no trade to make because there's no pattern at this point. The next bar that we have is a very bearish bar, coming all the way down, matching anything below the 50% or at the 50% is going to be considered a reversal pattern, right? So right now, the pattern is a reversal. So we still are inside the competency area of the first indecision bar, which would be the opening range bar. This means that there's still nothing to trade. There's nothing to trade in the stock at this point, and the reason why is because there is still no pattern to be traded. All that's happened is we have buyers stuck in the top of this candle, stuck in the bottom of this high wave candle, and now we have buyers stuck in the top of this big candle, and we have sellers also in the top of this big candle. Okay, so in the bearish candle. So all we're doing is trapping buyers and sellers at this point. There's no pattern, there's no imbalance in the market. What we want to wait for is we want to wait for a pattern we recognize, a pattern to be built. We want to be patient, right? Let everybody else get trapped in their trades before we want to execute our trades. The next candle is exactly another reversal pattern. It goes up. The rule is it's above 50%. We get ourselves, it's pretty much a shaved top. We do have a little bit of a bottom. So what can we start to understand about this bottom? We had our reversal candle pattern, and this wick tells us that there were sellers expecting price to go lower. There were people that were excited. There were people that had FOMO that got into this trade expecting lower prices to happen. Now, after we get the reversal pattern and it's bullish, now let's look at the next candle. And this next candle does tell us something. We get some selling pressure, but what's important is we have continued buying pressure. We have a wick at the bottom and at the top on this candle. This is telling us that there are still buyers and sellers arguing in this area. Now let's just go ahead and draw in the rest of the pattern. Now, what I find to be interesting about these next 4 candlesticks is they're all indecision bars. However, they're bearish indecision bars. Price continues to creep down, grabbing buyers and sellers from tops and bottoms of these wicks, and they're all getting trapped into their trades. What is nice about it is if we start adding up these candlesticks, so this big bearish candlestick, we have this candlestick that got put in right here, this green candlestick that gave us the other reversal bar. All of these indecision bars, these 3 indecision bars in a row, what does this candle equal? If we have ourselves our reversal, our main reversal pattern, right here, then what does this candle make? Now we get ourselves a very powerful bearish bar in the opposite direction. Remember, at the first, we had an exhaustion bar or a bullish exhaustion bar going up. Now that it's reversed, now we have a bearish bar coming down in the stocks. And if we were to combine all this, this would be the wick. The body would be these candles right here included. Now this got awfully cluttery. Let's delete it. The point I'm trying to make is we have to be patient and wait for a pattern to form. If there's no pattern, there's no trade. It's that simple. Once we get the pattern that formed, as we can see as we're looking at the chart right here, okay? We got the breakdown. Here was support. We're underneath the new high wave candle. What's important is this body closed underneath the high wave candle. That gives us an idea that the closure, the only way it's going to go in reverse is we would have to get what we call a recapture. The bulls would have to push up 50% of that previous breakdown candle, this candle, the candle that closed underneath the indecision bar. In order to get the recapture, it'd have to get back into the area of the opening range bar or the indecision bar or first candle of the day. What is important, if we look at our 5-minute time frame, at this point, when we get the breakdown, so here is the support we're talking about. This wick right here is our retest. And this is the point I want to bring up. When we're playing the indecision bar, when it finally puts in a pattern that we recognize, let everybody do the fighting, let everybody do the arguing back and forth. The important part is once it breaks from one direction or the other, we play the retest. Don't buy the breakout, buy off support, let others buy breaking out of resistance. We buy the support, which would be the breakout. You put your stop at the high of the pivot, or I would go at the high of the indecision bar at the pivot. This would be at that point above 50% of the arranged candle of the day, the first candle of the day. This would prove that the stock price would trap more buyers or more sellers in the stock, and so forth and so on. It would continue, okay? But my stop would be at the pivot high. I would wait for the retest. I play this pattern like this. You always wait for the retest. Be patient in the trade. The reason why we get the retest most of the time in a trade like this off the indecision bar is because there's so many people trapped. Once it flushes underneath and it gets back up to that level where their stop loss was at, where they didn't take their stop loss because they all want to see if there's a recapture. Once it fails the recapture, everybody runs for the exit at the same time. You get that two forms of selling pressure in this instance, and on the bullish side, you get two forms of buying pressure. If this video, if you like it, if you want me to break down more technicals, go ahead and leave a comment in the box below. Don't forget to hit the thumbs up button, share the video if you like the information, and I'll see you in the next video.